Welcome back to this Moneycontrol live stream. You're watching Closing Bell, with me, Nandita, Khemka, and look who's back.
And I'm Yatin Mota. Yes, I'm back from a short break, and obviously,
Not
once
back
I'm
to
back,
some
yeah, and
very
the
good
Bears
news.
are also back.
Yeah, Yatin, when we were away, we hit that, coveted mark of 20,000. In fact, we made a high of 20,200 as well till about Friday. But then once again, from Monday, we came under selling pressure. And, the festive cheer is clearly missing on the Lal Street, given the fact that we have, tumbled over 200 points or thereabouts on the Nifty. Just about holding on to that 19,900 mark. And on the sensex, in fact, you saw nearly 800 points being shaved off. And, if you look at the market cap today, nearly 3 lakh crore rupees wiped out from, BSE listed companies. So, pretty dreary day coming in when it comes to the market action. Well, let's also take a look at what the mid and small cap indices were doing. They were largely outperforming the benchmarks today, given the fact that the Nifty mid cap index was down 0.2%, small cap index down 0.8%. Even then, the benchmarks, of course, lost somewhere around 1% or thereabouts. Sectorally, all the sectors in the red, led by private banking names, led by realty, metals. And, if you look at some of the losers, of course, HDFC Bank and Reliance Industries, these two were the big laggards in today's session. Aside of that, JSW Steel was also down and out, and a lot of these other names like BPCL on the back of a downgrade by Jefferies, SBI Life was the other one not doing all that well. On the gaining front, you had some of these PSU power stocks doing well, Power Grid, Coal India, NTPC, and Bajaj Auto continues its upward momentum. That was among the gainers, and Sun Pharma was the other one that was gaining. But of course, we'll be watching out for the Fed policy outcome later tonight. Ahead of that, there are some jitters. Street is watching out for what the language that Fed chairperson Jerome Powell will be using, and perhaps signaling an end to the rate hike regime. But Yatin, quite a few movers in the mid cap end of the markets as well.
Absolutely, and there were movers, but if you look at the overall advance decline ratio in trade today, it was almost 1:2, which means that for one stock gaining, there were two stocks declining clearly. HDFC Bank with a weak start spoiled the sentiments. Today we had a new listing, RR Kabel, and this is the first company to get listed on the T+2 basis for the new IPOs. So very quick listing is what we saw for RR Cable after the legal change that SEBI has done with respect to IPO listings. The IPO closed the shop close to 1,200 rupees per share. The issue price was 1,035. So probably when you got shares allotted, you would be sitting on a gain of nearly 15-16%. So good listing for RR Kabel. That stock is always in focus, given the fact that there is a lot of traction in stocks like Polycab and Havells, and the peer set there about. In the mid cap end of the market, Bluestar, that stock we'll talk about it in detail, but that stock was up 13% after the QIP launch. SJV and Nazara, Suzlon were the other stocks gaining. However, today we had PSU banks like UCO Bank, IOB, Central Bank of India witnessing profit taking. All of these stocks down anywhere between 5 to 6%.
All right, PSU banks, after having a stellar run, came under a fair bit of profit booking today. But with that, let's also take note of some of the stocks that are on our radar this afternoon. No points for guessing. The first stock on my list is HDFC Bank, given the fact that the stock has clocked its worst single day fall in over 4 months. And of course, the sentiment was spoiled after the analyst meet that the company had in the earlier part of the week. In fact, brokerages have slashed their target prices post the analyst day meet, and most of them have maintained their overweight and buy rating, but Nomura has downgraded the stock to neutral from buy. In fact, target prices have been slashed. Nomura has cut the target price to 1,800 rupees per share from 1970 or thereabouts. It says that the sharp uptick in the NPAs in HDFC's corporate loan book is a big negative, and because of which the asset quality of the merged entity will also come under worsen going forward. Jefferies believes that the HDFC's NPLs were higher than what was being anticipated, and so does Kotak Institutional. And Bernstein has said that they expect earnings to be depressed for the coming few quarters. Let's talk about the negative surprises that Nomura has pointed out in its report. It says that, as I mentioned, asset quality ratios will deteriorate, have deteriorated rather after the merger. In fact, even the merged entities margins are likely to go down by 25 basis points due to excess liquidity, and margins could fall by somewhere around 25 basis points for FY24. Due to the accounting changes, net worth has declined, and even cost to income profile has been elevated, and all of which will lead to a worsening of return ratios. I think that's what Nomura is saying. And when you look at HDFC Bank's expected performance vis-a-vis peers, Nomura expects the margins of HDFC Bank to come down to 3.5%, while ICICI Bank could hand in a margin growth of somewhere around 4.6%, while Axis Bank's margins for FY24 are seen at 3.8%. So here on the margin front, HDFC Bank is expected to underperform its peers, and even on the valuation front, based on the book value estimate of Nomura, HDFC Bank is now trading at FY24 price to book value of somewhere around 2.6 times, while ICICI Bank is trading at 3 times and Axis Bank is trading at 2.2 times. So looks like couple of quarters will be a little more rocky for HDFC Bank, but market experts are fairly bullish. We had Saurabh Mukherjee on Avaz today. He was saying that it's still a good long-term play, and even UTI AMC, Vethi Subramaniam had said that he doesn't expect the ROA and growth to suffer for quite some time going forward. So couple of quarters of pain, but looks like we'll have to see how actually it pans out for HDFC Bank from here.
Absolutely, and this is one stock which clearly took down the Nifty. However, the Bank Nifty was slightly balanced given the fact that there were some gains from Axis Bank as well as ICICI Bank. Yeah. But the one stock which was gaining traction in a rather weak market today was Bluestar. Now this refrigerator brand, or you can say the electronics brand, is looking at aggressive expansion plans at their Sri City unit. Obviously, because of that, they have been looking to raise funds. The company informed the stock exchanges on Monday this week that they would be looking to invest close to 1,000 crores via the QIP issue. The QIP has opened, according to sources which CNBC Avaz has contacted and learned that the company is all set to raise 1,000 crores from investors. The price band or the floor price which is fixed should be having a 2% discount. So probably the indicative price for the QIP should be close to 770 rupees per share. Now the company, apart from investing this 1,000 crores into expansion, is also looking to reduce debt. So the company probably will use these proceeds from the QIP to reduce debt and fund expansion, which probably the market likes at this point in time. There is always a strong traction from institutions when it comes to the India growth story, manufacturing in India, consumer facing businesses are always doing well. So Bluestar, which is into refrigerators, into cooling units, into air conditioners, is a strong consumer brand and probably garnering some good institutional demand, and hence the stock in trade today was up as much as 14-15%. So clearly, on the back of the QIP launch, the stock of Bluestar was in focus.
Right, I think interesting to note that the rest of the market was feeling the chill, but Bluestar was one stock that kept itself warm in today's session. But the other stock on my list is JK Tyre. Given the fact that we have a bullish report coming in from DAM Capital, it has initiated coverage on the stock with a buy rating and target price of 315, which implies a 23% upside going forward. DAM Capital believes that JK Tyre has been steadily gaining market share over the last 2 to 3 years, and it has been witnessing all-round performance, in fact, on all the operational fronts. In fact, focus on premium categories, new passenger vehicle launches. These are some of the positives that DAM Capital has listed out for its bullish call on this stock. If you look at the stock, it's up 85% over the last 6 months or so. Strong financials. First quarter profit surged somewhere around 300%, Yatin. Sentiment for tire industry is already pretty much positive, given the fact that the government is spending so much on infrastructure, and the tire industry is also of course a beneficiary, and there's a rising demand for vehicles in general. But if you look at some negatives, I think it's the debt picture that's a little concerning, given the fact that it has a debt of somewhere around 4,500 crores, if I'm not mistaken. And going forward, how it plans to reduce the debt is something that Street will be watching out for. But just want to point out that despite the kind of run-up it has seen over the last 6 to 7 months, it has a trailing 12-month PE of 17x, which is far cheaper compared to its peers in the industry. So the going looks good, but of course, how much more upside will depend on how the company plans to look at its debt. reduction going forward.
Absolutely, and you know, the truck and bus radial segment has been doing well for companies like JK Tyre, which are largely into the commercial vehicle side, you know, of the business. Typically, companies like Apollo Tyre or Seat would have a better mix on the passenger vehicle segment, which are the typical four-wheelers or the passenger vehicles. But JK Tyre has been largely focusing on the TBR, which is the truck and bus radial segment, which has been the bread and butter of the company. Obviously, they have been also consolidating, you know, other businesses which they recently acquired from the Birla group of companies. But yes, the stock was in focus, up 6% in trade.
Well, I think that wraps up, you know, the stock segment, and of course, wraps up our time on the show as well. But of course, we'll be watching out for the Fed decision that will be announced later tonight, and we'll get you coverage on that starting tomorrow morning, 8:30 a.m. So come back and join me on Morning Trade. But if you have any comments in the meantime, leave them in the comment section below. And from Yatin and me, thanks a lot for watching. Let's hope that there are better days ahead, Yatin. I'll just give you some leniency as to, you know, the kind of sell-off we saw in the markets. Hopefully, it is a one-off, and we will see some bit of buying coming in later in the week. With that, thanks a lot for tuning in. From Yatin and me, goodbye. You know, stay tuned to Money Control for all your other news and updates.